Subscribe to our YouTube channel and press the bell icon to never miss any update from Samco.
Hello everyone, I'm Sandeep Avange. Today I'm going to tell you whether you should subscribe to the upcoming IPO of Sona BLW Precision Forgings Limited, aka Sona Comstar or not. Starting with the IPO details, Blackstone-backed forging player Sona Comstar is planning to raise Rs 5,550 crore via a combination of offer for sale of close to Rs 5,250 crore and a fresh issue of Rs 300 crore. The IPO will be open from 14th to 16th of June and the price band is fixed at Rs 285 to Rs 291 per share for a lot size of 51 shares per lot bid. Sona acquired Comstar recently in 2020 to make its entry into battery electric vehicles, apart from its growing differential assembly and gear segment. It is one of the leading manufacturers and suppliers to global EV markets, example to PVs, CVs as well as tractors. According to Crisil, Sona Comstar was one of the top 10 players globally in the differential gear and starter motors market in FY20. The company has diversified presence across developed markets like US, Europe, India and China among developing markets, and it has sizable presence and market share in growing battery electric vehicles of 8.7% as of FY20. Apart from this, it continuously invests in growing its R&D capabilities with 3 R&D centers currently in India. Moving on, one of the key differential variable for this company is its well-diversified product and geography mix. As you can see, it's mainly present in developed markets like US, Europe, where the automotive industry is more matured, and with that, it is also present in developing markets like China, India. With this, it can mitigate the impact of cyclical downturns in the automotive industry. With such good product mix and a sizable presence in electrified battery vehicles, will allow the company to further capture opportunities in the growing EV space. Now, moving on to financials. The company has delivered a strong revenue CAGR growth of 50% during FY19 to FY21, and its net profit from continuing operations clocked a 47% CAGR from FY19 to FY21 at Rs 215 crore, which was aided by a sustained CAGR growth of 49% in its operating profit despite unusual year of FY21, which was impacted mainly by COVID-19. It maintained highest operating margins between 25 to 28% in FY19 to FY20 as compared to its global peers average of 18%. The company has a strong margin profile due to its critical component offerings in India as well as globally. In addition, it also delivers superior return ratios, which we will see in the next slide. As you can see, the company's return ratios were too high during 2019. Post the merger of Sona with Comstar, its return ratios were stabilized. Even then, the company's return ratios remained like to its global peers and established Indian peers. Its return on equity and return on capital employed in 2021 stood at 17% and 20% respectively, as compared to established players like Bosch, Bharat Forge, Motherson Sumi, which stood in the range of 7 to 12% only. The company plans to repay Rs 241 crore of debt from the IPO proceeds, and even without that, its debt to equity ratio remains well below industry standards. The company's growing cash flows were halted in FY21 due to high trade receivables, which was mainly due to COVID-19. Coming to the specific risk, firstly, the company's business is dependent on the performance of the automotive sector globally, including key markets such as US, Europe, India and China. Any adverse changes in conditions affecting these markets can adversely impact businesses' results of operations and financial conditions. Secondly, 80% of the revenues are coming from top 10 customers and 32% are coming from its top 2 customers. Any loss of such customers or a significant reduction in purchases by such customers will have a significant adverse impact on the business. Thirdly, This could not be a major risk in the long term, but in FY21 the company's trade receivables were almost doubled, which impacted their cash flow from operations. If the impact of COVID-19 is not stabilized, this increasing trend in receivables could continue and impact the company's future cash flows. Lastly, Sona BLW is relatively highly valued given its small presence in the forging space, but it is well positioned to capture the highly growing battery EV market not only abroad but also in developing markets like India and China. Hence, we recommend investors to subscribe to this IPO for listing gains only.